So, like I said, I want to talk about shadow rejection, right? Some people guys say we should talk about shadow rejection. So I said shadow rejection is just a terminology. There is nothing special about it. It's just the market sweeping liquidity, right? On the higher time frame. Is the market sweeping a previous daily high or a previous daily low or the previous weekly high or the previous weekly low? Now, but I am focused on this shadow rejection, especially on the daily time frame. Now, I'm going to be teaching it very short, simple, and precise, nothing too difficult. So, when you come into the daily time frame, pay attention, especially on the table, right? When you come into the daily time frame, this is usually what you want to see. Now, this is the previous daily high. Let's say this is Tuesday. So you come today, and today is what? Wednesday. So this is Tuesday's high, and this is what? Tuesday's low. Now, this Tuesday's high right here, let me just write so that people quickly get Tuesday's high, which is a previous daily high, right? You can say previous daily high, right? So now, and then this is what? Tuesday's low. Okay. These are the Tuesday's low, which we can call previous daily low, right? Okay, now, very good. Now, if Wednesday candle opens, and immediately Wednesday candle opens, the first thing Wednesday candle does is it opens up, push to the upside, takes out this high, it sweeps this high, and then drop down to close bearish. No, that is not what we are talking about. It doesn't have to close bearish. The candle don't need to close yet. Once it closed, it is called CRT. Now, before it closed, we are anticipating something. Now we have this high taken out like this. Previous daily high has been swept. Then we have something like this. Then it's going to likely. So in the process of the sweep has happened, right? And then the candle is trying to, like, I don't know if you understand. The candle is trying to drop. Immediately after the sweep, exactly where this high was swept, you want to go into the 1 hour time frame because I'm using the daily time frame to explain. So usually I prefer it on the daily time frame. So you go 2 time frame lower. On a normal circumstance, you are supposed to go 1 time frame lower. If you're doing CRT, if you are doing candle rejection, you go 1 time frame lower for a breakout. But this time around, you go 2 time frames lower. Meaning, instead of the H4 time frame, you're going to go into the 1 hour time frame and you're going to be looking for a breakout. And on the lower time frame, strictly, what do you want to see? You want to see like this, a sweep and a break. This is what you want to see on the 1 hour time frame. So after this high has been swept, right here, you want to see something like this on the 1 hour time frame, right? And then where do you execute from? You execute based on the basic doctor system, QM, Apex. Now, it doesn't really have to be overlapping with the H4 key level, but it is making it high probability if it is overlapping with the H4 key level. H4 key level, H1 key level. Now, in this QM and this Apex, all the scenarios of the basic doctor system applies, and then this QM and this Apex must be the QM and the Apex must be fresh on the 30 minutes time frame, not just the 1 hour. So 1 hour, 30 minutes must be fresh. Okay. H1 must be fresh, M30 must be fresh. You know how to choose. And I'll repeat for the last time. It says if the QM is fresh and the apex is fresh, use the QM. If the QM and the apex are both fresh, sorry, if the QM is not fresh, use the apex. And if the QM and the apex are not fresh, use the OCL. So sometimes you tend to find an OCL here or here. So it depends when you use it. And that is how you trade it. Now, any of this key level you are choosing must fulfill the 5 criteria for entry, which is a break of structure, liquidity, key level closest to liquidity, key level mitigated, and the key level overlapping with the higher time frame key level. Not compulsory for the last one. Okay, so that is how you execute based on shadow rejection. And your target is the what? Tuesday's low, this low right here. This is going to be your target. So what do you do? Shadow rejection, H1 breakout, and then basic doctor system. That is all. Do you understand? That is how you execute, right? There is nothing too special about it. There is nothing. So once you see that thing, you want to execute that day. Once you hit stop loss, you're done. It's okay. And your target wants to be the Tuesday's low. So it's a shadow rejection. Why is it called a shadow rejection? Because a week, the Japanese people, I know you guys read by Candlestick Bible when you were learning how to trade. The Japanese people call it what? shadow. So because it is called shadow, not a wick, so it is the market rejecting after taking out the shadow. So that's why it's called a shadow rejection. Okay, so most of the time, I want to see this shadow rejection towards market price. See, it's usually a signal for retracement and also reversal. If the market want to retrace, it usually use this shadow rejection. So for you to be able to capitalize aggressively from the beginning of the move, that is what brought about shadow rejection. But if you want to confirm the move, you wait for this candle to close. On shadow rejection, this candle have not closed. But for CRT, this candle to close. Then for it to now become a CRT, you mark out this area. Then you want to refine this into a structure on the lower time frame. And then we'll now expect the next candle to open like this. The wick should go up, tap into this, and then we now sell down to take out this previous daily like this. What is this now? This is now a complete CRT. So how many trades would you have capitalized on? A shadow rejection, right? Next is CRT, then two beautiful trades. And the next trade, if the market wants to give us another opportunity here, is now what? A KLR, where I've already explained so many times, and then the market will still use this, give us a drop, pull back all the way up, and then use this for itself. Those of you that have my course will understand all these things. So if you pay attention and if you go into a lot of pairs, you see shadow rejection that failed, you see shadow rejection that held. We don't teach anything that is 100%. In short, we hardly teach something that is up to 70%. But at least our own aim is to make sure our wins are more than our losses. And alhamdulillah, they are. Okay, so if you go to gold, like today on gold, now let's take a look at gold. I was waiting for a buy off of this zone, right? If you see, I was looking at this as liquidity and I was waiting for a buy off of this zone. But now look at something. If you come to the daily time frame, already today, look at the shadow rejection here. Already gold already told you that today it wants to buy. So that's why it gave you this shadow rejection. Now the same thing, let me change this gold to this. Okay, you can see my zone was even marked out still. My zone is still marked out where I wanted to buy from. Let's go into, can you see it on the 1 hour? This is where I wanted to buy from. So now, if you pay attention now, the shadow rejection I'm explaining to you guys as a form of establishing bias. Look at this one, a shadow rejection right here. Now, once you have a shadow rejection right here, you want to go into the 1 hour time frame quickly, and you want to see what a sweep and a break, something like this. Shadow rejection is like market has rejected here a sweep, then you want to see a 1 hour breakout above here, a break, and then you want to execute, and the buy already started, right? So this is what a shadow rejection is all about. It is called what? A shadow rejection. So that's the same thing that happened today, and I was looking for a buy around here because I refined it on the 15 minutes to prove it to you guys. Can you see? So I refined it on the 15 minutes. So it's now a key level right here that got tested severally, disrespected, and I have liquidity. So I wanted the market to come take out this liquidity, tag me in here, and then we ride for a buy. Why? Because we have a shadow rejection on what gold today. So that is what a shadow rejection is. It mostly comes in form of retracement, but it is highest probability when it comes towards the market direction. So it's just a previous daily high or a previous daily low called shadow rejection. Do you understand? So that is it. So if you pay attention to a lot of moves, you see most of the time market gives what shadow rejections. So this was the move I took today. Sorry, this one did not even tag me in. I don't know what type of spread the Profem have. The pricing was what was different. Like I used this price, but my own price on that account was quite different, right? So we'll look at one or two examples and then we'll see. There was an example here on USD card. Let's take a look at. All right. This was a shadow rejection here. This is also a shadow rejection here. So this one is high probability because immediately after the shadow rejection, this can close bullish and give a breakout. This one too is poor because you have a shadow rejection. Can you see it's very small? Market took out previous daily high. Quickly you go into the 1 hour time frame. After the sweep, this is where it happened. Market swept the high right here on the 1 hour time frame. A market gave a break. So you want to confirm a break, you want to like and check the line chart. So market break below here. Immediately after the break, you want to look for the QM and the apex. This is the candle that caused the break. So you want to see your QM right here, and you want to see what Apex is not fresh, right? So if you follow all the scenarios I explained, you're going to be using what the QM. So you need to make sure that that same QM is fresh on the 30 minutes time frame. So this is the candle that caused that pullback. So this QM is still fresh on the 30 minutes time frame. So you can still refine on like the 15 minutes time frame. It depends on what you want to do. But refining on the 15 minutes time frame, it can come in form of over refinement. This is something I've explained not once, not twice, not three times, right? This is something I've explained for some time to you guys. So I think that is all about shadow rejection. There's nothing to talk about. There's nothing too much to talk about on about shadow rejection, right? There's nothing too much to talk about shadow rejection. So nothing too much to talk about on shadow rejection. Cool. Right. So I think this for this one, depending on how you want to execute, the network is bad. And then this one from the downside right here, let's go. This one here, the sweep here and the break. There was a sweep here and a break here. Go to the daily so that you don't feel like I'm forging it, right? There's the shadow rejection here. So I've already seen it. So I came here. So before that candle closed, you can see the way the candle closed around here, heavily bullish. So you would have found an opportunity to execute around here. Do you understand? Probably around here because you have you have an imbalance, key level overlapping inside an imbalance with liquidity, something like this. And this should have been what? A primary execution. So this is structure type 3 that you need to master too. So the same thing happened on my trade today on UK 100 and German 40. So you don't feel like that was the same type of trade I just explained right now. Can you see key level here overlapping inside an imbalance? You can see it clear on the 15 minutes. It's an engulfing candle that failed right here, okay? Engulfing candle that failed here. So then we have something like this. So for today, again, I want you guys to see that I used shadow rejection on UK 100. So I already have this zone marked out since yesterday, but the market was not like giving. So what happened today? Let's look at it again. Shadow rejection. So market came here, took our previous daily low, and then quickly go into the 1 hour time frame. When I came into the 1 hour time frame, I was looking for a breakout, and market quickly gave us a breakout above here. So immediately after the breakout, all H4 key levels are supposed to be used for buys. Not necessarily market must tap on H4 key level. I mentioned this, right? So what did I see? I saw a continuation structure and a very huge displacement, which is telling me that market wants to use this particular area. And then that's how I used this particular area. It was not overlapping the H4 key level. And then I used this area. Market did not tag me in, but went to take profit. Did you see that? So it's a way that you can get a correct directional bias. And remember, anything you are being taught, you need to test and back test. You don't go into the chart and just do anything. You don't do that. See, think something that is going to work for you might not work for me. Something that is working for me might not work for you. That is how the market is. That is how the market is, right? So I think that's going to be all. So shadow rejection, the person that asked for the topic, this is shadow rejection. This is all I can say about shadow rejection, from how you can execute down to how you can generate your buyers, right? So peace out. Peace out.